Hi there, Brad Finsilver, ArizonaReverseMortgageGuy.com, and we're going to cover today, how does a reverse mortgage actually work? So one of the key differences that people ask me is, what's the difference between a reverse mortgage and the mortgage that I'm currently used to, which we call that a forward mortgage, but let's just say your normal mortgage for our discussion right now. One of the key differences between a reverse mortgage and a forward mortgage is you have the option to make monthly payments, but you don't have to. So if you're used to making a mortgage payment every month, on a reverse mortgage, if you have a loan balance, you don't have to make any payments. You can if you'd like, but you don't have to make any payments for the rest of your life. The only thing that you're responsible to pay is your property taxes, your insurance, your homeowner's insurance, and any homeowners association dues. That's your obligation. Unless we set up your reverse mortgage with something called a set-aside account, and a set-aside account would cover either your taxes and insurance, but that's a separate thing that we will explicitly let you know if that's the case. So assume you're always responsible for your taxes, your insurance, and your HOA dues, unless you're told otherwise. One of the other questions that I get a lot on reverse mortgages is, do I still own my home? That's a very common fear, because back in the olden days, there was all over the news where people were losing their homes and they were afraid that they didn't really own their home, that the bank really internally does own the home. Couldn't be the furthest thing from the truth. You maintain ownership of your home. I've talked about this in a lot of my videos. So in a reverse mortgage, you maintain ownership and you'll stay on title. How do you get the money out of your home? Reverse mortgages allow you, provided you have sufficient equity, multiple options of how to get your money. There's really 4 different ways to do it. Option 1, the reverse mortgage allows you to set up a line of credit on your house. Option 2, you can get a lump sum of money at your closing. Option 3, you get a monthly check or a monthly annuity every month for a certain term on your loan. Or it could be a combination of all 3 in one category, where you can do maybe you get a little bit of annuity every month, you get some money at closing, and you still have additional line of credit if you need to access it. So there's some flexibility in how this is set up to tailor to your unique individual needs. Another question that I commonly get is, when do I have to pay this loan back? So you're allowed to keep this loan for your entire life. You can stay in your home for the remainder of your life, and if you stop using the home as your primary residence, if you pass away, or if you're in a medical facility for an extended period of time, usually, if you have to go somewhere for a few months, that's not a big deal and you return to your home. But if you're not using the home as your primary residence for over a year, that's when it becomes a problem. So under a year, you're typically going to be okay. But as long as one of the borrowers on the loan is occupying the property as a primary residence, no issues. So just assume that when the last borrower passes away, at that point in time, the reverse mortgage has to be paid off. Another question that I get a lot of is, what if my loan balance after I pass away exceeds what my house is worth? And in that instance, you're not passing anything negative onto your heirs, because in that instance, you would just give the keys of your house back to the bank and there would be nothing would be owed at all. You just move on, or your kids move on, whoever inherits the home would just give the keys back and the bank would take the house in that instance. So if you're upside down, a reverse mortgage is something called a non-recourse loan. That means the bank only has the house as collateral and nobody's personally guaranteeing the loan. So if there's not adequate money to pay the loan off from the equity in the home, you're good to go. You're scot-free, and your kids can give the keys to the bank and move on. In the instance that there is equity in the home, then of course your kids are going to want to either work with the reverse mortgage company where they can buy the home, and they will get the equity, and so they can keep the house by getting a new loan of their own. And option 2 is they sell the house. So if the house is worth $600,000 and the reverse mortgage balance is $200,000, they would go ahead and sell it, and the difference of the $400,000 less whatever real estate or selling expenses exist, they would net just like in any other mortgage. Thank you very much. If you have any further questions, you can reach me at ArizonaReverseMortgageGuy.com. Call me directly, 480-253-6047. And if you're interested in more content like this, please subscribe. Thanks so much.